Have you felt it, that feeling that the ground is shifting under your feet when it comes to business? Well, it's not just you. The playbook that worked for the last decade, let's just say you can toss that right out the window. Today, we're going to unpack the new rules for thriving, not just surviving, in the economy of 2026. And you know what? Let's just cut right to the chase with this quote. Free cash flow rules again. It's so simple, but that's the entire game right there. Forget all the complicated growth narratives and fancy projections. In this new era, this is the mantra. This is what matters. So let's be really clear about this. The game has fundamentally changed. And this isn't just some temporary blip on the radar, okay? We're talking about a whole new environment with a completely different definition of what success even looks like. So the real question is, are you ready? All right, first things first, we have to understand the new battlefield. You know that whole era of easy money, cheap capital, and just rewarding companies for having a good story? Yeah, that's over. It's done. We are playing a brand new economic game now. Here's what that looks like on the ground. You've got central banks tightening the money supply, which basically means cash is just harder to come by. Lenders are being way more picky about who they give money to, and the cost of capital, the price you pay for the money to fund your business, has shot way, way up. Just look at this comparison. It's like night and day, right? We've gone from a world that valued exciting growth stories and big, ambitious projections to one that demands cold, hard proof of earnings and a rock-solid balance sheet. Investors aren't buying promises anymore. They want to see the receipts. And capital? It's not just harder to get. When you do get it, the pricing is absolutely unforgiving. And all of that brings us to the single most important rule in this new environment. For just a minute, forget about reported profits or exciting new ventures. The ultimate measure of a company's health, its real strength, is its ability to generate and manage actual cash. So what does that mean in practice? Well, it means everyone is laser-focused on one key metric, free cash flow. The easiest way to think about it is this. It's the actual cash left in the bank after a company pays all its bills and invests what it needs to keep the lights on and the machines running. And why is this the new gold standard? Because those paper profits that never actually turn into cash, they're losing credibility and fast. So how do the winners play this new game? They adopt what we're calling a new cash discipline. And it really boils down to three things. First, they get really, really good at managing their working capital. Turning stuff like inventory and payment terms into a real strategic weapon. Second, they scrutinize every single dollar going out the door. And third, they make forecasting their cash flow with scary accuracy a non-negotiable part of every leader's job. Now, this intense focus on cash, it leads to a completely new way of judging a company. The metrics that investors and lenders and even your partners care about, they've been totally rewritten. The old scorecard is officially out. I mean, the entire logic for how we value a company has been flipped on its head. We went from rewarding those compelling stories and, let's be honest, those really confusing adjusted numbers to demanding proven earnings quality, hard cash flow, and just clear, consistent results. The market is just not willing to pay a premium for uncertainty anymore. And the one document that tells this whole new story, it's the balance sheet. Seriously, it's not just for accountants anymore. It has become the ultimate test of a company's resilience. Things like net debt and how much breathing room you have with your lenders, that stuff is now what separates the survivors from the companies that get sold off for parts. And this new focus on stability and strength brings another word right to the forefront: risk. When money is expensive and any sign of uncertainty gets punished, managing risk is no longer some background task for the finance department. No, it's a core part of the entire strategy. So what are we talking about here? Well, the classics are back. Think interest rates, currency fluctuations, commodity prices. But the one that's really keeping executives up at night is refinancing risk. That's the danger of not being able to get a new loan when an old one is due. And protecting against these things, or hedging, it's not optional anymore. It's just what you have to do. And when it comes to debt, playing the waiting game, hoping for better conditions, that's a losing strategy. It's wild, but companies are actually being rewarded for refinancing their debt early, even if it costs them more right now, just to lock in some certainty. A company's ability to easily cover its interest payments now directly dictates its strategic freedom. Okay, so we've gone over the new landscape, the new scorecard, and the new risks. So let's put it all together. What does a winning company actually look like in 2026? What's the formula? Here it is. This is the profile. The winner in 2026 is obsessed with controlling costs. They report everything with crystal clarity. No more funny numbers.
Their leadership is credible, they inspire confidence, they have a fortress of a balance sheet, and maybe most important of all, they have a proven track record of superior execution. They don't just talk, they actually get things done.
This quote right here really sums up the whole thing perfectly. The market, your investors, your partners, they're not buying a grand vision anymore. They are rewarding three things, and three things only: control, clarity, and evidence. And that brings us to the final critical question, the one you have to ask yourself. In this new world that values evidence over stories, you have to take a hard look at your own company, or maybe your own investments, and ask, what story is the balance sheet really telling? Because that's the story that's going to define who wins in 2026.